How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my very own personal journey to amassing $100,000 within my Vanguard brokerage account. Over the last handful of days, investors have been anticipating the Federal Reserve's minutes that are due to come out today. As we stand before the market opens, we are actually down in regards to the Dow Jones by 0.4%, the S&P by 0.5%, the NASDAQ down by 0.75%. Now, my personal account is by no means an exception to the rule. It did fall by $397.47, leaving my account now sitting at $91,938.87 on the day. Regardless of the market conditions and where exactly we stand today, it is all about investing in high quality dividend investments. That is exactly what I want to get in today, talking about 5 high quality investments we can make, kick back, relax, allow these stocks to actually recover, and of course collect on the dividends all along the way. A video you're not going to want to miss out on. So go ahead, tap on that thumbs up button and help me grow this channel. And of course, if you haven't already subscribed, make your way over to doing so. I'd certainly love for each and every one of you to be on this journey with me. Now, YouTube, let's go ahead and dive right in. As mentioned, today's video is going to be all about 5 high quality dividend investments that we can get invested into, just kick back, relax, hold on to for the long run, collecting on the dividends, allowing the actual stock share prices to recover. At the end of the day, we are making money on these investments. However, I want to just briefly talk about what exactly is happening and why we're seeing this pullback. And it is because the Federal Reserve is due to come out with their minutes disclosing what exactly their policy is going to be moving forward.
Patrick Harker, he's due to speak at 9:30 a.m. for a virtual event with the Delaware Chamber of Commerce, so we might hear him also echo some of these comments. And of course, we've got Fed minutes coming later today as well, so we should get some more clarity on that from the last meeting. In the meantime, even though I say the conversation has shifted away from how many interest rate increases, of course, that's still part of what's important here. And markets are pricing in aggressive tightening here this year of 225 basis points. The last time we saw the Fed move rates upward by that much in a year was back in 1994.
Now, ultimately, every time the Fed speaks, we do get a bit of a pullback as investors are anticipating a potential policy change. Newsflash, there's never anything really new. The Federal Reserve gives us exactly what we need to know weeks and weeks prior to the minutes actually coming out. So am I worried about this whatsoever? Not in the slightest, but I do want to talk about these 5 high quality dividend investments because regardless of whether or not the market is up, down, left, or right, it's these types of investments that are going to fare very well come our financial futures. So let's go ahead and talk about our very first dividend stock, which, by the way, is not new to the Blue Lion Finance channel. It's a stock that I've actually spoken about time and time again because it is such a high quality investment. Now, with that being said, it is actually first on the list today as opposed to last because it has already begun to rebound. Now, this investment is Rowe Price, ticker symbol TROW. Rowe Price is a global investment management firm offering funds, advisory services, account management, and retirement planning. Rowe Price has been in business since 1937 and has become an industry leader. It has generated a market capitalization of just over $35 billion. And given the vast majority of its assets are actually linked to the stock market, in particular the NASDAQ, it has certainly had a heck of a ride given all of the volatility over the last handful of months, falling from around $194 all the way down to around $154. That's about a 20% change. But get this, their PE ratio is still sitting at a low here of 11.77, which makes it a ripe opportunity to still continue to pick up shares of Rowe Price. Now, analysts only have expectations that this stock is of course going to rebound, coming back up to a median stock share price of $158 per share and a high stock share price sitting around $198 per share. But we are here for Rowe Price's dividend. Their current dividend yield is sitting at 3.08%. They've been shelling out that dividend for 36 years, consecutively increasing it year over year, making Rowe Price a rock solid dividend investment on that Dividend Aristocrat list. Now, coming up on our second dividend investment of the day, I want to talk about Lowe's, ticker symbol LOW. Lowe's is one of America's largest home improvement retailers that was established back in 1961 and has done one heck of a job, especially within the last few years, as they made a strategic pivot in terms of their business strategy to become a quote-unquote everything home improvement store. This pivot allowed for their stock to literally soar during the pandemic, and in my opinion, Lowe's is really only just getting started. They have a current market cap capitalization sitting at $135 billion and a PE ratio that is currently hovering around 17.03. However, at this point in time, given all of the market conditions, especially with high inflation, consumers are actually taking a little bit of a break from spending in those DIY projects when it comes to retailers like Lowe's, and we're actually seeing their stock share price take a hit as it fell from around $257 a share all the way down to around $205 a share. That is again another 20% change, so a ripe opportunity for us, especially as analysts are looking into Lowe's future and seeing, of course, a rebound coming back up to a median stock share price of $285 a share and a high stock share price sitting around $300 per share. Now we are here for Lowe's dividend. They're coming in with a dividend yield sitting at 1.58%. Now they have been shelling that dividend out for 48 consecutive years, paying it year over year. They are nearly a dividend king, so talk about a reliable investment. You can find it with Lowe's. And moving right along to our third dividend investment on the day, it is a stock that I have yet to mention on the Blue Lion Finance channel, so I'm happy to talk about Pentair, ticker symbol PNR. Now Pentair is an American water treatment company that is working with both residential and consumer segments. They are there to help people move, improve, and enjoy their water. Pentair has a rich history of serving communities, and since their founding in 1966, in my opinion, just given the necessity of their actual business, they offer an incredibly safe bet that is not likely to disappear anytime soon. They have a market capitalization sitting just over $8.92 billion with growing healthy year-over-year returns. Now to top it off, their PE ratio is hovering around 16.24. In terms of their share price, just given all of the volatility in the market, Pentair has certainly tumbled. It has fallen from $70 a share down to around $53 per share. That is about a 24% change. Again, a ripe opportunity here for us as long-term value investors, especially with analysts looking into Pentair's future and seeing, of course, yet another rebound coming back up to a median stock share price of $71 per share and a high stock share price coming all the way up to $100 per share. Now with their current dividend yield sitting at 1.53%, we talk about yet again another reliable dividend investment. They've been shelling that dividend out for 45 consecutive years, increasing it year over year, so another dividend aristocrat that you can add to your dividend investment portfolio. Next up, I want to talk about another stock that I've never spoken about on the channel before, but I want to give a warm welcome here to Expeditors International, ticker symbol EXPD. Expeditors International is an American worldwide global logistics and freight forwarding company, which, as you could probably have guessed, has had a fun couple of years to say the least. Nevertheless, they were founded back in 1979 and quickly established themselves as a trusted logistics name, providing year-over-year returns with a current market capitalization sitting at $16.31 billion. And as of right now, they've been ebbing and flowing with the market. Their stock is currently down from its 52-week high, where it was sitting around $136, and it's now trading for around $97. That's about a 25% change. Now, in regards to their PE ratio, it is sitting at a low of around 11.78, and as we see the light at the end of the tunnel in terms of all these supply chain disruptions, we can certainly see a rebound. That is exactly what analysts are looking forward to, as it's going to be coming back up to a median stock share price of around $111 and a high stock share price sitting around $125. But we are here for dividend with a current dividend yield sitting at 1.15%. Now in terms of reliability, they've been shelling that dividend out for 28 consecutive years, increasing it year over year. So again, another dividend aristocrat we can add to our list. And last but certainly not least, the best discounted stock opportunity on the day, at least in my opinion, is coming in from Stanley Black & Decker, ticker symbol SWK. Now Stanley Black & Decker is an American Fortune 500 manufacturer of industrial tools, household hardware, and a provider of security products. After its founding in 1843, it certainly made a name for itself with brands from DeWalt, Craftsman, Paladin, and more. Now, in my opinion, investing in a retailer like a Lowe's or a Home Depot is solid. However, it's still a third party, which I say, why not just go straight to the source? That leaves us with Stanley Black & Decker, which in my opinion is more of a fail-safe investment. Now, with very similar struggles battling supply chain disruptions and a sluggish home improvement market given high inflation, and Stanley Black & Decker has taken a bit of a hit, falling from around $195 down to around $141. That is about a 28% change. A great opportunity to take advantage of a phenomenal discounted stock opportunity, especially with the safety net of their market capitalization sitting just above $23 billion, coupled with a lower PE ratio currently sitting around 14.72. Now, analysts are looking into their future and not only seeing a rebound, but continued growth coming in at a median stock share price of $199 and a high stock share price sitting around $250 a share. Now, in terms of Stanley Black & Decker's dividend, it is sitting at 2.54%. Now, get this, Stanley Black & Decker has been shelling that dividend out for 54 24 consecutive years, increasing it year over year, making Stanley Black & Decker a dividend king. Talk about reliability and safety. This is certainly an investment you'd want to add to your dividend investment portfolio. Now, YouTube, that is it in terms of the 5 high-quality dividend investments that I have for you today that, in my opinion, are trading at undervalued stock share prices, and at the very least, you should add to your dividend investment watch list. Now, if you like what you heard, you learned something new, drop all those comments below. Let me know your thoughts on these companies and perhaps if they're even in your dividend investment portfolios. Of course, understand I'm not a financial advisor, so always do your due diligence prior to making any investment decisions after my videos. And you can certainly help me out in growing this channel by simply tapping on that thumbs up button. And of course, go ahead, subscribe to the channel. I'd love for each and every one of you to be on this journey with me. Now, YouTube, until the next video, I will see you all there.